Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, September 11th, 2024. I am Frank Ochoa, aka PivotBoss. Happy Hump Day, everyone. Here's a look at the ES in the daily time frame post CPI and CPI data. CPI month over month and year over year coming in line with forecasts. The core CPI month over month number coming in a little higher than expected. The initial movement was to the downside for a new low, intraday low here on the day, still inside day against the previous session's range. And right now, keeping an eye on the previous session's lows. Those lows right there in the 54.50 zone could be significant if this market is going to break further to the downside. Right now, a strong reversal off the Friday lows, and any push through the recent highs here, call it 55.10, starts to open up a little bit of a recovery effort to the upside. From an intraday perspective, we've seen an initial reaction to the downside and now snapping back toward the midpoint of that impulse move. So we could have a newly developed intraday key range to work with here, and that's going to allow us to fade the edges until proven otherwise. So fade new highs, fade new lows of the impulse move right now. And this market, again, building toward additional inflation data still yet to come out on Thursday, including PPI and core PPI as well. So again, right now, any failure through 54.50, and that opens up quite a bit of downside ahead and another rotation to the downside. Keep an eye on prices above 55.10, a rejection there, and it fades back into the range, a breakout, and you start to open up some of the upside. If you take a look here at the NQ, similar price action here for the NQ, still a narrow range day for both the NQ and the ES. Both are trading 39% of ADR. Both saw an initial drop on inflation data and a snapback, and the NQ right now has also developed in intraday key range after inflation data. Again, those strong extremes, the 18,870 on the top end, the 18,730 on the low end, those are fadeable opportunities at those extremes until proven otherwise. Still an inside day right now, and like the ES, any failure through the previous session's lows starts to really open up some downside up ahead. But at the moment, inside day and within the impulse move, that could provide some fadeable short-term fading opportunities, short-term scalps for the intraday session. Looking at crude oil, crude with a big bounce back day here so far today, ahead of crude oil inventories later today. This one is higher by 2+% right now, a bit of a snapback. After yesterday's heavy selling pressure, stop run day down. We were looking for an outside day down yesterday, and we got it. We were looking for a more modest low range outside day, ended up being a high range outside day, but nonetheless the 69 zone was defended and we got new lows. That was the expectation. Heading into today's session, we were looking for a snapback to the previous session's mid, around 67.15 to 67.25. And after that move, now we're looking to see if bears come in to defend. This has been a highly bearish trend, still below the 8-period pivot-based EMA, and this market continues to hold below significant support. Yesterday's low, 65.27, and any pullback today could still be seen as a selling opportunity for a continuation down into 64s. We have 64.34 as the 100% key range target, 64 as a market structure edge, and then 63.64 as the previous year's low. So right now, bears looking to defend into morning strength for another rotation down toward those 64 targets below. Looking at gold futures, gold marginally lower right now after inflation data. This one continues to hold within that multi-week trading range. It's starting to look a little heavy up here. It's starting to look a little heavy, which could lead to another round of weakness. But even if we did see that drop, it could provide a buying opportunity for a continuation higher. But as of right now, looking a little heavy. Bears coming in with a failed new high. This thing could go outside day down and see a little bit more weakness toward 2,500 over the next several days until proven otherwise. Still range bound with an upward bias, however, any significant pullback could still provide a buying opportunity until proven otherwise. Looking at the YM down 0.6%. This one dropped pretty quickly here right on inflation data, bounced back to the midpoint of that impulse move, so we have ourselves another intraday key range on the intraday time frame there. That could provide favorable opportunities again until proven otherwise. This one does look a bit heavier compared to the ES and the NQ right now, as it is already very close to the previous session's lows. Again, this market, the way that it rejected the previous close, previous highs of the month, suggested a pullback toward the midpoint. We didn't quite get to that mid. That midpoint is still in play. A failure there, and you start to open up more downside up ahead. So right now, looking a bit heavier than the broader market here, and another impulse key range developed on an intraday basis, which could provide intraday scalping fade opportunities. Looking at Bitcoin, another heavy day down for Bitcoin, down 2.7%, a two-day bounce back on Monday, Tuesday, and already pulling back here a little bit here today, down 2.7%, and holding below the previous month's midpoint and the 200-day moving average. Overall, this market, as I've mentioned before, continues to look heavy. There could be some short-term bounces seen, but when you look at the broader picture of this market, still a large form rounded top, still a large distribution style range, and we could still see another flash drop ahead until proven otherwise, until this thing can give us a very strong reaction off those lows. Again, we could be building toward a Q4 rally attempt. So right now, still looking fairly weak at this moment. ETH, very similar. ETH down 3% right now. Outside day, failed new high, outside day down. Still showing weakness in the downtrending market. This one has been much weaker against Bitcoin itself. A newly developing mod Pima crossover sell signal. These small blue signals are trend confirmed sell signals, so they only fire in a downtrending market, and that confirms that we are still in a downtrend as of right now. 2200 continues to be a significant area of support, but given the lack of bounce off of it recently, we could be looking at a breach of that level coming up, which could give us a retest of 2000 below the first of the year. So right now, still looking very heavy and continuing in the downtrending price structure. All right, that is it for now. We'll see how this develops here heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.